So large cap, mid cap, small cap, we are building and really having the blend of all three of these Vanguard funds. So when you think of the entirety of the stock market itself, you are building everything out itself. So a lot of people will ask, why don't we just invest in the VTI? Now the VTI is the Vanguard Total Index, meaning that it includes the large cap, the mid cap, and the small cap. The reason being, with these three ETFs specifically, you can build a portfolio that kind of encompasses everything, and you can do it at different percentages. Now, for me personally, if I was putting in something like this or building a portfolio of this nature, I would look at something like that Vanguard S&P 500. That would probably be roughly 60% of my portfolio. When we look at the large cap, when we look at the IT, when we look at the ability for it to really grow, 60% of my portfolio would go into that S&P 500 fund. The other 20% I would put into 20% mid cap, 20% small cap, meaning that between the mid and the small, you have 40% of that portfolio built in. If you set that portfolio, it is literally a portfolio that you could really set it and forget it. And when you even break out this, again, a little more of a focus on the industrial, we're looking at the healthcare market, the financial, the discretionary spending, and a lot less of that focus when it comes to technology. So overall, when you think of building a portfolio and really having the ability to go into those large S&P 500, those large companies, the mid companies, and the small companies, it does make a big difference on how you break it up. That is the reason why, again, you could choose something like the VTI, put 100% in there, but a majority of it, because it is weight-based, you would be putting a lot more money into those large tech companies, which is the reason why breaking it into three individual ETFs like I did here today in this video makes a really big difference when it comes to the growth and really the development that we see overall.